Now, I have the great pleasure, not just of thanking them, but also making an introduction of Lord Gerry Grimstone, who's the Minister for Investment at the Department for International Trade, as well as the Department for Business, Energy and Industrial Strategy in the UK. Lord Grimstone, as well as being a fantastic minister and really shaping what we'll hear today about what the UK can be as a global Britain and bringing the inward investment. He helped lead the Global Investment Summit a few weeks ago of the main heads of state, as well as the main heads of investment, such as Stephen Schwarzman, who gave apparently Michael Charlton, who's here, an A+ for the agenda and programme he did. But as well as doing that, Lord Grimstone comes understanding this community as well. He was previously at Candover and in charge of that as chairman, and we're delighted under disclosure that some of our investors at the company that's behind Global Corporate Venturing called Morsonia actually has some of his former colleagues on our shareholder cap table, who now run probably the UK's best early stage investment group called 24 Haymarket. I'm not obliged to say that, but I like saying that anyway. So please welcome to the stage Lord Grimstone.
Well, that's great. That's great, Jim, and thank you very much. Nice to see everybody. Isn't it nice coming to a real conference when you can see more people than just this bit upwards? As Jim says, I've come fresh from our Global Investment Summit last week. One of the most tricky things I've done, you try organising a finance panel with Jamie Dimon, Steve Schwarzman and Larry Fink and work out which of them should speak first on the panel. We counted up that we had, I think, $37 trillion of investable capital represented at the summit. So I'm sure today we're going to at least equal that record, if not beat it, Jim. So great to be here. Look, we've all been through over the last 18 months the most challenging in living memory. I mean, the human misery, the economic misery, and really a complete shaking up of things that we assumed, and we're going down many different paths as a result of that. And of course, during that time, the resilience of societies and economies worldwide have really been stretched to their limit. But I do feel, and I hope you agree, that as we are now emerging from the shadows of this terrible pandemic, hopefully, it gives the global economy, it gives all of us a chance to reset and to recalibrate and return to growth. And I think it would be a great shame if we don't take all the opportunities that are available. And I've been fond of saying recently that I think the investable opportunities that the combination of net zero, some of the developments in life sciences, infrastructure, are probably throwing up more investable projects than I've ever seen in my lifetime. And as the UK's investment minister, it's my job to promote this and to make it clear to people that the UK offers some of the most diverse and dynamic investment opportunities. I really do believe this, anywhere on the planet. Look, my government wants to make the UK the best place in the world for high growth, for investment and innovation, including a favourable tax regime and easier private market access for pension funds. And I see that investment and trade are two of the strongest levers that we have to re-kick and restart economic activity after COVID. And certainly in terms of our strategies to level up economic opportunity across the United Kingdom, there is no more direct way to inject economic activity into an area than to bring in investment or to have a firm in that area win a large export order. We don't often see perhaps investment and trade in those terms, fulfilling a social function, fulfilling an economic function, but it's been absolutely part of my philosophy that's what we're up to. I'm hoping that the plans to review the fee charge of 0.75% on DC pension schemes will free up more capital to invest in in long-term assets, such as private equity and venture capital. I do believe myself, this is a hobby horse of mine, I think we may need more collective vehicles to do that. The opportunities are there, but not all DC schemes will be ready to take them on their own. So I am hoping to see some people in this room, more collective investment vehicles springing up, aimed particularly at pension funds. We've had a very good run with fintech. British fintech now represents, we reckon, around 10% of the global market share, generates £11 billion in revenues. And I really think that's been a really kind of a landmark proposition for the UK over recent years. We published at the Global Investment Summit our new UK Investment Atlas, and that's an online facility which, once it's fully operational, it's looking mainly at sustainable investments at the moment. I hope it will be the go-to place for people who want to get information on investable opportunities in the UK. And I would say that a lot of my work over the last nearly 20 months has been trying to turn what I call investment aspirations. And when I came into politics from business 20 months ago, boy, were there a lot of investment aspirations around, but there was a dearth of investable projects. So by trying to inject that kind of practicality and actually making real life projects out of the aspirations. Overseas investment in the UK rose to its highest ever level in 2020. Our total stock of foreign investment is $2.2 trillion, and that's second only to the United States. And the reason why foreign investment is so important to us, of course we welcome domestic investment as well, that all our research shows that foreign invested companies in the UK are more productive, they generate more IP, they generate more exports, and they generate more jobs. So overall, we get various additional kickers coming into the economy when we can attract foreign investment into the UK. As part of that, the Prime Minister established last year our new Office for Investment, located out of Downing Street in the Department of Trade, and that's really where we're trying to handle our most strategic investors and our most strategic investments. And often it's as simple as breaking down barriers in the bureaucracy, barriers across Whitehall, and just helping people to get things done. VC investment in the UK, obviously a particular interest today, has remained at a very high level despite the economic fallout of the pandemic. Some of the recent headlines I've picked up, we had that $500 million fundraising by the B2B firm SaltPay, just over 440 million raised by Accenture, the AI-powered drug company, 443 million pounds raised by Sterling Bank, and I could go on and on. And I really think that deals such as this and the progression of deals that we're seeing like this really does underline the UK status as Europe's most attractive investment hub. Of course, the bold decisions we took last year on the vaccination program, I think were interesting. In a sense, it was a very entrepreneurial activity that could have been done by a VC firm, because the government took big bets, big money, and placed it on the table very early on. Absolutely the right thing to do. But the interesting thing is, I think it's given us a taste, and it's given the private sector a taste for more things like that. So I think some of the boundaries between public sector, the government, VCs, investment money, have broken down as a result of COVID, and I think that's all for the good. Of course, we're with COP26 going on at the moment. Absolutely right to focus on what the effect of net zero is on investment. I mean, I like to go around saying that the first industrial revolution in the UK, when was that? 150 years ago, was based entirely on carbon. It was a coal revolution, the first industrial revolution. And there's a nice kind of symmetry, in a sense, that this second industrial revolution, which it surely is based on decarbonisation. And it shows, in a sense, how cycles of human behaviour and how technology moves on. It is pretty amazing that we are already the largest producer of offshore wind energy in the world. That supports 460,000 low-carbon jobs. We plan to increase this to 2 million jobs by 2030 as we strive to decarbonise our economy faster than any other country in the G20. And I can take you up to parts of our east coast, the northeast coast. I can take you to Humberside, Tyneside, Teesside, and you'll see industrial activity springing up as a result of the green revolution, which we haven't seen there for 20, 30, 40, or 50 years. And I think that's, again, one of the very, very exciting adjuncts of what we are seeing at the moment. And I've got no doubt that the outcome of COP26 will, of course, be poured over. But I've got no doubts, whatever the outcome is, we are on an absolutely irreversible path here to net zero. And the impact that will have on investing opportunities, on investment theses, I think will be profound. We're trying increasingly to, when we put government investment into something, and we're putting £12 billion of government investment into net zero over the next few years, to try to do it in a way that enables us to leverage private sector investment to come in alongside us. And the lesson I try to drum into my colleagues is that this doesn't happen by accident. And the more you can involve investors in policy making, the more you can apply what I call the investor lens to policy making, the more likely are you to get policies which are investor friendly and can be invested into. And a large part of my work is spent doing that. And for example, excuse me, we put £160 million in to accelerate offshore wind by delivering a deep water port for the manufacture of offshore wind turbines. Now, it may not have occurred to you, but a blade on a wind turbine is over 100 meters long. You can't transport it by road. You can't manufacture it in bits. So where do you want to site your manufacturing plants? It's on the banks of a deep river, so you can literally roll the blade out of the river onto a barge and take it out to in situ to be installed. And it's things like that which are bringing this economic activity, which I mentioned earlier, back to the parts of the UK. So I think that we all have a joint responsibility to drive this forward. Governments around the world will be putting in billions, but the private sector is going to have to put in trillions going forward, to meet climate goals. And you just then think through what the trickle-down impact of that is going to be on investment opportunities for people in this room. And I absolutely know that corporate venture capital, the investors, the entrepreneurialism that comes out of CVC is going to be absolutely critical as we seek to realize a sustainable future. And one of the prime objectives I've set for the Office for Investment is to help realize net zero by melding together the expertise of government, foreign direct investment, and private investment to drive sustainable growth. And it's working. Some of you may have picked up on the sovereign investment partnership that we signed with the United Arab Emirates just a few weeks ago, where they've committed to invest £10 billion into the UK over the next few years. And this is real money. I think so far this year they've invested around £1.3 billion. It'll be £2 billion by the end of the year. And to give an example of how we're using this fund to leverage our own investments, the Treasury decided a couple of years ago to put £200 million into kickstarting additional life sciences funds in the UK. Our friends in Abu Dhabi then said they would put £800 million alongside that £200 million. So we've created a leverage of 4 times, and we now have a £1 billion fund to invest in life sciences. And it's those opportunities increasingly I'm going to be seeking out. Great to hear things like today. We've got the Sumitomo Corporation have just launched their new fund, Presidio Ventures Europe, and headquartered in the UK. And I want to see more and more of those corporate VC funds being established in the United Kingdom. So, despite the headwinds, despite the terrible 2 years we've had, the fact that VC and CVC investment has continued to thrive, I think it's an absolute tribute to the enduring strengths and resilience of the UK economy, but also absolutely the perseverance of investors. And it's interesting, you've probably all seen the recent analysis from Bowhurst. Equity investments reached a record £6.3 billion in the third quarter, more than double the amount invested during quarter 3 2020, and that's putting this year on track to double the total investment to 2020. So if we want evidence that we are bouncing back, after the depths of the pandemic, I can think of no better statistics. And according to GCV's own analysis of 400 corporates around the world investing in startups, an aggregate £200 billion worth of deals were agreed in the first 9 months of this year, a new annual record. So absolutely, I'm sure that this fantastic community in front of me today, the people watching virtually, are absolutely capable of meaningful impact on a global scale. So if I can help you secure stable competitive returns here in the UK, whilst also driving innovation, improving the lives of our citizens and citizens internationally, from the green economy, through to healthcare, I think we will all feel pretty good about that. And as we continue to recover from the impacts of the pandemic, I very much intend and hope and to do all I can to ensure that governments and businesses stay aligned on this investment focus. Through that, as I've said, we'll empower the creation of higher quality, higher wage jobs. We'll lift up the best and brightest of renewable and clean tech companies. And let's hope that together we're creating a better future for the generations to come. Thank you all very much.
Well, thank you very much for that, Gerry, and I've poured you some water just in case you need it. But we're going to open up for some questions for the next 15 or so minutes. I'll take the liberty of asking a couple myself, but do think in what sort of things you might want to ask Lord Grimstone. So just started off, you described it as perhaps seeing the most investment opportunities that you've seen in your lifetime. What has been the response to investing in great British startups and scale-ups?
I think it's been enormous, but there also, of course, there's some other reasons why that happened. Look, we had 3 years of the stultifying Brexit debate in the UK. And by the end of that, investors would come up to me and say, look, I don't mind what you decide, but for goodness sake, decide something, because we can put together our investment theses, on these different scenarios. Then, of course, we had COVID and a lack of trouble. That pushed it back. So I think, in a sense, Jim, we're seeing a bit of kind of unmet demand, and that's really helping. But also I think that we are seeing new opportunities. And some of the things I see in life sciences, some of the money that's going into that, I mean, these opportunities didn't exist 5 years, 10 years ago. And I think it's often CVCs, because of their, the deep knowledge of their sectors, will be the first to pick these up.
Yeah, that's very true. I mean, we had a delegation of CVCs going up to Cambridge earlier in the week. And one of the companies they saw there was Pragmatic, which is a great spin-out and startup in the region. Yeah, their fab's based up in County Durham in the north, outside Durham, and they've just raised 80-odd million to set up the second one, also in the same area. But one of the things that I found quite interesting with them was that actually they decided not really to take foreign, so much corporate money where they felt there might be issues longer term in some of those. And I think in January comes into place the new National Security Investment Act. So what sort of impact do you think that could have on corporate venture capital into the UK if there's going to be a review, or potentially a review looking at foreign stakeholders, foreign ownership, if it's seen as being in systemically important areas?
Well, look, I've got no doubt, having been into this very deeply, it was about absolute time that we had to update our national security framework, which hadn't really been touched over the last 20 years. I played a large part in that updating, and my part was to ensure that what we did was workable and usable by investors. So we looked at what the US do in CCIUS. We looked at what Australia, New Zealand, France and Germany do. We try to take the best bits of each. Of course, it goes operational. I had a meeting about it just before I came over here, 8 weeks' time. We intend it to be a very slick process. The proof of the pudding will be when it starts up in 8 weeks' time, how slick it is. But I'm very pleased that we we've got the definitions out of the 17 subsectors where there's mandatory notification required. And I really think if people look at the descriptions of those 17 sectors with an open mind, they won't be surprised at what's included in those sectors. But the absolute proof of the pudding will be, how quickly can, prospective transactions move through the sausage machine to get an answer. But I intend to take a very close interest in it. I see my role, and in fact, my role is great in government because I can go around annoying pretty much everybody. Because I can, everybody wants investment, and I can point out to my colleagues that what they're doing actually is not going to achieve investment. So I'll be keeping a close eye on the NSI Act. I think it will work. I think it will be rational, and I think probably, a couple of years' time, a year's time, once people are used to it, it'll seem, much less momentous, frankly, than it does now.
That's really helpful. No, I could ask questions of you all day. It's a great pleasure and honour to be here, but I don't want to hog Gerry, you yourself. So can I open up for some questions? We should have a microphone. Any thoughts, any questions for Lord Grimstone? Otherwise, I will carry on hogging him for myself. So put your hands up. I can't quite see it at the moment, but maybe I'll sort of leap in while people are doing, which is around the sort of the energy transition. We run GCV, what we call the Global Energy Council for CVCs. This is a group of looking across the value chain led by National Grid, Lisa Lambert, head of that, and it includes Amazon and General Motors from the consumer side, Hitachi, Schneider Electric from the sort of industrial side, TDK, on the sort of battery side and and then obviously the producer side like BP, Shell, Chevron and Total Energies. And that sort of program is trying to think, what does this transition tangibly mean? And I suppose, how do you convince this sort of global community of a couple of hundred corporates investing in this, through this council and this group, to think about the UK, that leadership? Is it just offshore wind, or is it nuclear fusion, like we will hear from First Light Fusion later? Is there other areas? Where do you think the most bang for the buck, the areas that can make most impact shortest term could come from?
Look, I think the beginning of, we know what the start of this process of going to net zero is where we are now. We know what the outcome we want to get by 2050. But let's be straightforward with each other. the road between the two is still a little bit kind of misty in parts. But it's absolutely clear to me that an energy mix is going to be necessary. And perhaps in the past, governments haven't always been very good at anticipating the need for some of these mixes at the right point in the history. And to my mind, that mix will certainly have in it hydrogen, and it will certainly have fixed offshore wind and floating offshore wind. It will certainly have carbon capture in it. I've been much involved in the Rolls-Royce small modular reactor program. I think that's a very exciting program if that's able to move forward, and we're supporting that. But I think it's going to be one of these cases that as well as there being a mix of technologies, perhaps the dominant technologies won't come altogether clear for the time being. I'm responsible for the automotive sector in government. And the automotive sector is in an amazing state at the moment. I mean, 1 in 7 cars sold in the UK so far this year have a plug attached to them. All the OEMs have been caught out in Europe by the speed with which customers want to move towards electric vehicles. They're all adjusting their production schedules, bringing forward their new models earlier. I'm sure some of them are represented in the room. And I think I calculated a few weeks ago, there's something like £8.5 billion of investment, up for grabs over the next few months, as the effect of the transition bears down just on that particular industry. And of course, if we in the UK, if we get our lion's share of that, I call it the auto renaissance. This is our opportunity to recreate the UK automotive industry as one of the leading industries, in the world. So when you talk about transition, and then you have to start looking at batteries, again, completely unclear yet, who will be the eventual winner in battery chemistry and battery design. So it's a time of great innovation. But as I say when I go around, at a time of innovation and a time of great change, that's of course when the investment opportunities come from, and it's where the savvy investors get on the right side of that kind of change and adaptation.
Definitely. I think we got a question, Eileen. I saw you there.
Yeah, Lord Grimstone, my name is Eileen. I am with InQtel, actually, so which you probably know. But the question I have is, so in the U.S., from a policymaker point of view, we have a $50 billion CHIPS Act that we're trying to pass, and that's going to hopefully solve the supply chain issues we have on the supply side. But one of the things it doesn't do is take care of the demand side of the equation. So while investment in companies and helping them out is very useful in the beginning, what's more useful, of course, is ability to help them generate revenues. And what I'd like to understand is, what is your view on what the UK government can do to really deal with the demand side of the equation for these startups?
Yeah, no, certainly. Look, we have to acknowledge, don't we, that there's global dislocation on a scale that we have never anticipated. And you can hear various reasons as to why that bit of dislocation has occurred, or that bit of dislocation has occurred, or that bit of dislocation has occurred. But you add it all together, and that is massive global, and that is absolutely affecting demand as you would expect it to. I've got a great faith, though, that with a little bit of assistance from governments, a little bit of catalyzing, the market will adjust and it will get this right itself in the months to come. Now, I'm not saying for one moment that the transition isn't difficult and uncomfortable.
Perfect. So I was just saying, 1 minute left, I think. So I think we're going to run out of time for the final thing. So perhaps what I'll ask Lord Grimstone to do is just sum up what he would like this group of about $2.5 trillion of aggregate annual revenue from the corporates who are here. There's a few $100 billion of venture assets under management. So nothing on the scale of the GIS, but it's a powerful community. What wish would you have? What request do you have for them? What action would you like them to take?
I'd like you to be, open-minded about the opportunities in the UK. I'd like you to come forward to myself and to the Office for Investment if you encounter obstacles. because it is our job to help you remove those obstacles. And I'd like you to be as excited as I am about the opportunities that I see.
That's the perfect way to summarise. Sorry, that was me, I'm afraid. That's a perfect way to summarise the end. It's a great request, a great action item. So please join me in thanking Lord Grimstone.